So, how are volcanic eruptions, drone strikes in the Middle East, and the world's central banks all connected? It sounds kind of random, right? Well, today we're going to break down how these seemingly separate events might actually be weaving together into a single powerful financial forecast.
You know, the analysis we're exploring today kicks off with this really powerful idea that our world is under this immense, simultaneous pressure from all sides. It's suggesting that the planet itself is literally churning on the inside, and, well, our society on the surface is in turmoil right along with it.
To really get a handle on the financial picture, we first have to look at the landscape of global instability. It's kind of the backdrop for everything else that's happening.
And what's really wild here is just the sheer scope of it all. I mean, we're talking about volcanoes erupting for the first time in ages, drone wars heating up from Iraq all the way to Ukraine, coups in Africa, new tensions bubbling up in South America. And the argument isn't just that these are a bunch of separate random events, it's that they're all symptoms of a very fragile global system that's starting to crack under all this pressure.
Hey, before we connect all this chaos directly to the economy, just a super quick reminder. If you're finding this useful, please do subscribe and turn on those notifications so you don't miss our next explainer. And as always, just remember, this is for informational purposes, it is not investment advice.
Okay, so you've got all this chaos happening right on the surface, stuff you see in the headlines. But what's going on behind the scenes? According to this analysis, the real story, the hidden engine driving things, is unfolding in the quiet halls of the world's central banks.
It seems that after this whole period of cranking up interest rates to fight inflation, a staggering 90% of the world's central banks are getting ready to pull a complete 180. They're gearing up for what could be a massive new wave of quantitative easing, or let's just call it what it is, money printing.
And this lays out the chain reaction perfectly. Here's a simple way to think about it. Imagine you have a glass of orange juice. If you keep pouring more and more water into it, the juice gets weaker, right? It gets diluted. Well, when central banks print more money, the value of every single dollar or lira or euro gets diluted in the same way. So, to buy real tangible stuff like gold, silver, or property, you're going to need a lot more of that weaker currency.
Now let's zoom in and see how this plays out on the ground, because Turkey provides a really powerful real-world case study. This is where we can see that global force of easy money colliding with a unique local situation, creating what this analysis calls a super volatile environment.
The analysis uses this fantastic metaphor of a düdüklü tencere, a pressure cooker, to describe the Turkish economy. You have all these policies trying to keep a lid on things, like the official exchange rate. But underneath, this immense economic pressure is just building and building, and eventually it has to find a release valve.
And you can see these two completely different realities playing out. On one side, you have the official story. The currency is stable, things are under control. But on the other side, there's the lived, daily reality for people on the street, where the cost of food, housing, everything is just going through the roof. And how are they responding? They're trying to get their money out of the official system and into something tangible, something real.
So, here's the crucial point. That pressure is finding a way out. With official credit for big purchases being so tight, people are literally turning to their own savings, often held as physical gold, to buy homes and cars with straight cash. We're talking about an estimated $500 billion in under-the-mattress gold that's fueling this whole parallel economy, all while some major companies are really struggling.
So, given all this pressure, both globally and locally, the analysis presents a pretty clear strategy. It frames it as an escape hatch from what it sees as an inevitable decline in the value of paper currency.
Now, this isn't just based on some gut feeling. The author is pointing to a very specific technical pattern on the charts for both gold and silver. It's called a cup and handle because, well, it kind of looks like a teacup on the chart. And for traders who use this kind of analysis, that pattern is often seen as a big, flashing signal for a major upward price move.
So based on that technical pattern and everything else we've talked about, the projection for gold is a potential price target as high as $4,500 an ounce.
And for silver, which the analysis suggests could have an even more dramatic move, the projected target is $62 an ounce.
But here's a really critical point the analysis makes over and over again. We're not talking about a piece of paper that says you own gold. We're talking about physically holding the bullion yourself. The argument is that as this pressure builds, having the actual metal in your possession is what's going to count. And it even points out that premiums and sourcing issues for physical silver are already starting to show up.
All right, so we've connected the dots from a world in chaos to central bank moves to the pressure cooker in Turkey and some specific market predictions. So what's the bottom line here? What's the final takeaway?
Well, the analysis takes all this complex information and boils it right down into a few clear, strategic points for anyone looking to navigate these pretty turbulent times.
At the end of the day, the core strategy here is really about a shift in your mindset. It's about stop seeing precious metals as some kind of short-term speculative bet and start seeing them as fundamental financial insurance. It's about playing the long game, preserving your wealth against systemic risks and currency devaluation, and using any price dips as a chance to strengthen that foundation, not to panic and run away from it.
And that leaves us with this final thought from the source material. In a world where the gap between the official stories we're told and the reality we live every day seems to be getting wider and wider, understanding these deep-seated forces at play is really the first, most essential step to protecting your own financial future.